In this presentation, we're going to record the receipt of inventory with a bill. In other words, in prior presentations, we entered a purchase order requesting inventory. Now we're going to receive that inventory along with the bill and enter that into the system. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars practice problem. Let's first take a look at our flow chart. So we're going to go down to QuickBooks Desktop, taking a look at the flow chart. Last time we entered the purchase order simply being a request. So we requested inventory from the vendor. As we did so, we also put our customer in there because we had a special request for a particular customer. Not that the vendor cares about it at all, but we want to note it and populate it as we enter the purchase order so that when we receive it, as we're going to do now, we will then be able to track the fact that we have that inventory for a particular customer. So then we're going to now record the receipt of the inventory. Last time in month 1, we did so by simply paying for it with an electronic transfer with an expense form, basically decreasing the checking account. This time, we're going to record a bill for it. So that means the bill is going to be saying that we have the inventory is going up, and then the other side is accounts payable because we have not yet paid for it. That means the liability of AP accounts payable goes up. So let's go back to QuickBooks Online then. We're going to go back to the online, and we're going to be opening up a document or forms with the new item. We're going to be going to the payout, and we're going to add a bill this time. Remember, last time we added an expense, paying for it directly out of the checking account. And this time we're going to be going to the add bill, increasing the accounts payable. That's what you want to think of when you see add bill or a bill. When you go into it, it's just going to be a bill. The form is just simply called bill. And again, when you see bill, your mind just goes, oh, that means accounts payable is going up. Accounts payable is going up. All right, so we're going to enter the bill for the vendor that we created last time. It was the new vendor called Fender. So I'm going to type in Fender here, Fender. Our vendor, that's who we bought the guitar from. It has now appeared. When I do so, we get this little pop-up on the side, says, hey, there was a purchase order for Fender, I'm paraphrasing here, of 1003. And here's the amount. You can open it or simply add it, and that's the one we want. So I'm simply going to add it. So I'm going to say add that, please. And so we're going to add that information. It has been done. And then if I scroll down, we're going to put this on the books at 214. So I'm going to say this is 214. I'm just going to select the plus button until I get up to the 14th, like so. Terms, let's just go ahead and put the terms here for our new vendor Fender and put that on the net 30. We're not going to be in the category up top. That's where we would be selecting an expense account, but we don't want to just simply select an expense account or even an asset account, which you could do there. I could select inventory, but we don't want to do that because we want to put the item to track not only the account that's affected, inventory, but also the subcategory to track that inventory, the product. So we want our sub-reports to be able to tie out. Therefore, we're going to use the item detail, which has already been populated for us through the link that it had to the purchase order. So we'll just review the data here. We're going to say, yeah, we got a Squire. The Squire is what we got. That looks good. We're tying out basically the bill that we got and the actual unit of inventory with the purchase order that we sent out prior. One quantity, the rate looks good. That's the same. That's what we want. And the customer that we're going to send it to, now that we have it in our hands, we're going to call up that music store stuff and invoice them for that. To help us in that process, I'm going to make this item billable. So I'm going to say it's billable here. And that means when I create an invoice for the customer, which is what I'm going to do next, I'm going to turn around and create an invoice for this new music stuff. Then it will populate it for us. It's not perfect. It'll populate the cost, and we need to change it to the retail price, but it will populate that in. And I just want to show how this would work as well, because that billable item can be used for other types of things as well. Anytime you're paying for something that you want to basically include as part of the cost of the invoice, you can use kind of that same billable option to do so. So what is this going to do now when we record it? It's going to be increasing the AP, accounts payable, for that 168, and it's going to be also increasing inventory because that's what we got for the 168. It'll also affect the sub-accounts for who we owe, vendor, which supports the accounts payable, and the inventory account that supports the inventory. Let's check it out. Let's go to Save and Close, and let's open up our reports then. So this is kind of a fairly new thing, so let's open up our 3 reports and review it in them. We're going to be opening up then the balance sheet report, our favorite report being that balance sheet. Scrolling back up top, changing the dates up top from 01/01/20 to 12/31/20. We're going to run that report. Then I'm going to duplicate it, go into the tab up top, right-clicking on it, and duplicating that tab. I'm going to go back to the tab to the left. Then we're going to go back down to the reports. Then we're going to be opening up the P&L, the profit and loss, the income statement type report. Going to go back up top and change the dates within it. So I'm going to go back up top. We're going to change the dates from 01/01/20 to 12/31/20. Run that report. Then I'm going to duplicate this tab, right-clicking on the tab up top, duplicating it. Back to the tab to the left. Do this one more time. Back down to the reports. Opening up the trustee trial balance. We're going to search for the TB, the trustee trial balance, by just typing in trial balance, selecting the trial balance, and then I'm going to change the dates on that one as well up top from 01/01/20 to 12/31/20. We'll run that report. Then I'm going to go back up to the tab up top, right-click on it, and duplicate that report. So now we have our 3 reports. That was great. Now we're going to close the hamburger on the trial balance. Let's close the burger and hold down Control, scroll up a bit. And we're at 125, and then I want to check the accounts payable. So here's the accounts payable that has now increased by that 168. So if I select the accounts payable, there's the bill that we've entered into the system for Fender. If I was to select it, it would then of course take us to that bill that we have just entered, that form. So I'm going to close that back out. I'm going to go back up top and back to our TB. The other side then, not going to an income statement account, but to an asset account. So here's the asset account, selecting the asset account. If we scroll then down, we see there's our bill for Fender for the asset account. So there it is, that increases. And if I go back up top, also note, of course, that the supporting document report would track this item for the inventory as well. That's why we can't just use the account, because we also need to know which item was purchased, so QuickBooks can track the actual inventory item. So the inventory item would be on the inventory report. I won't check that this time. Note, if I go to the balance sheet, those 2 accounts, of course, are on the balance sheet. We have the accounts payable going up, and the other side being the inventory going up. And there's no effect then on the profit and loss at this time. Why? Because we haven't yet used the guitar in order to help us generate revenue. We have an asset of a guitar instead. All right, let's go back to the first tab. We're going to be doing this again. We're going to go back to New. We're on the first tab. I'm going to go to New. I'm going to enter another bill, this time for Epiphone. So this is the other purchase order we had outstanding. We received the guitars for Epiphone now. You could select the drop down and find that vendor. I could just type in also Epiphone and pick up that vendor. We should then get a pop-up after I select tab for the purchase order related to them. And there it is. Now note, it didn't do it before because I was zoomed in. So anytime you're like zoomed in over 100%, then if you work with the forms, QuickBooks will kind of get funny sometimes and do some funny things. So I logged back out when that happens. I went back into the bill, and then I went back to 100%. Okay, same process here. And we're just going to simply add the purchase order. So we're going to populate this with the purchase order. So we're going to add the purchase order here. Looks like it did what we wanted. And then we got the date at the February 14th. We're going to say it's going to be net 30 is the term. So the due date is going to be 30 days later. And then once again, we're not in the categories because we don't want to just assign an account only. We want to assign an item, which will have the account inventory as well as the supporting documentation. So it's going to be an Epiphone. We got 3 of those at $400 for $1,200. What's this going to do when we record it? The bill means accounts payable will go up, so AP will go up, and inventory will go up by that $1,200. Let's check it out. We're going to say save and close. Let's check this one out using our standard forms, using the balance sheet. So let's go to the balance sheet first. I'm holding down Control and scrolling up to, let's say, 125. And then I'm going to go into the accounts payable. Let's go to the accounts payable. It hasn't refreshed, but I'm going to zoom into it, and I think it'll refresh when I go in there. And so there it is. And if we go to the right, then we see the Epiphone, there's that 12,200. So that looks good. Going back up top, then the other side should be in inventory. So if we go back into the inventory, so that's going to be up in the assets section. So we're up in the assets section because that's where it's going to be. And we go into inventory, scrolling back down, and we see the bill for Epiphone there as well. So that looks good. Scrolling back up, let's just take a look at the supporting reports now. If I go back to the first page, I'm going to go down to the reports, and I'm going to hold down Control and scroll out a little bit, back down to 100. So we're in favorite reports, business overview, who owes you, sales, customers, what you owe. So under the what you owe, I want to take a look at the payable. I want to look at the vendor balance detail. Vendor balance detail. So I'm going to open the vendor balance detail because that's what I want to look at. I'm going to look at that one. And then I'm going to go back up top and all dates. So we'll keep it at all dates. And so now we see the Epiphone with the bill. So here's the bill for the Epiphone at the 1,200. Here's the bill for Fender, 168. The total of the vendor balance detail, 1,368. That should support the amount on the balance sheet. Back to the balance sheet, into the liabilities. I'm going to say liabilities, 1,368. All right, so that looks good. That's our supporting documentation there. We owe these two vendors. Then let's go back to reports. Let's check out the inventory report to see if we have the supporting documentation for it. Inventory. I would like the inventory valuation summary report. Let's take a look at the inventory valuation summary report. And then dates. I'm going to make this as of 12/31/20 and run that. So here's our inventory valuation. Here's our new Squire that we got down here. And here's our 4 Epiphones that we got. If we were to select that item, then we would get the detail for it. And here's the purchase order where we purchased those last 4. Going back up top, back to our report. And then we see the bottom line of this report being the 3312. That should be supporting the balance sheet. So if I go back to the balance sheet and see if that is indeed the case, I'm hoping it is. I'm pretty sure it will be. There's the 3312. It is indeed the case.